Are 50-year mortgages the answer? Well, let's look at the current state for home buyers in America. If you haven't been paying attention, you need about a six-figure salary to afford a home or the median price home in almost every state in the United States. On average, you need an income of $117,000 or more if you ask Bankrate, the Wall Street Journal, or the National Association of Realtors to afford the median price home in the United States. You might be thinking, well, then what if we looked at the typical or starter home? Starter homes are usually around $200,000, and that would be a good idea in the past, but the problem is there are fewer starter homes available now than there ever has been in the history of the United States. And about a quarter of homes purchased right now are purchased by individuals or joint investors, also competing with the single family home market. So how much home can you afford by salary? The math is simple. The recommendation is to pay less than 30% of your salary towards mortgage costs, or your debt to income should not exceed 30% of your debt when paying for a mortgage or home in the United States. However, about half of Americans already dedicate half of their incomes to rent or mortgage, which looks like this figure here to the right. So based on that information, here's how to calculate how much home you can afford. How much house can you afford by salary? Well, the simple answer, according to the federal government, is to keep your housing costs below 30% of gross income, and here's a breakdown by income. But this housing report from Harvard found that about half of Americans already spend more than 30% of their income towards housing costs. That would be rent and mortgage. And 50% of those individuals, are nearly 13 million households, spend more than 50% of their income on housing costs. So now if we update our infographic to 40% of income spent on rent or mortgage costs, here's that breakdown by household income. And if we update it to 50% of gross income, here's your breakdown of monthly spending, with the median household income at about $80,000 and average household income of about $120,000 in the United States. Using those assumptions, we can use a basic mortgage calculator, which you can get from almost any lender, to estimate how much house an individual can afford in the United States. For the median household income of $80,000, trying to keep their payments below 30%, if they can manage this 10% down payment of $30,000 with average interest rates as the date of this video, then yes, we can get their mortgage and principal below $2,000, but keep in mind, in many states you'll have to add back property tax, homeowners insurance, and possibly HOA fees, but we're still able to keep those total costs below $2,000 a month in this example. But when we compare that to actual housing costs in the United States, there aren't many states left where you can find a median priced home at $300,000 or less, especially in major cities. Which might explain why recently the median age for first-time home buyers reached a record high of age 40, with incomes nearing nearly six figures. Let me know in the comments, is it reasonable for you to keep housing costs below 30% of income where you live? The median price home in the United States is over $400,000, as you can see in this map here. So the 50-year loan or 50-year mortgage doesn't quite get us there. On average, they estimate that it will reduce the typical homeowner's mortgage by about $300 to $500 a month, or $3,000 to $6,000 a year. However, in most cases, $300 or $500 is not what's pricing people out of home ownership. It's actually the upfront cost or the down payment just to get or to afford that mortgage, which looks something like this, which has increased almost 40% since the pandemic. In order to get down back to the affordability of pre-pandemic costs, we would need home prices to drop by 40%, incomes to increase by 60%, or interest rates to return to nearly 2%. If there was a 50-year mortgage product introduced, keep in mind that first they would have to find customers for the product, or actually first we would have to find lenders for the 50-year mortgage. They would then need to find customers for that product, because everyone out there is not going to get a 50-year mortgage, and everyone's not going to finance into a 50-year mortgage. Additionally, 40 years of that 50-year mortgage would primarily go towards your interest costs alone. So now we moved from In practice, that means we moved from 30 years, which was already a long-term mortgage, to 50 years, which could possibly be a lifetime mortgage. When you consider that the median home buying age, a new record high for Americans this year, is 40 years old. So who would potentially be the customer for this 50-year mortgage? Here's what the current state of the United States looks like. Goldman Sachs found that the national average for marriage in the United States has risen to its highest point ever, or 29.7. That's 30.2 for men and 28.6 for women. And now I keep hearing about these transactional relationships.
I have no problem with transactional relationships. I actually think in this day and age, I can actually understand why a woman would say, you know what, you can't trust men anymore. They all cheat. They all do all this nonsense. I'd rather be with a rich guy, have all my kids with a rich guy. And similarly, I totally understand the man that says, you know what, women, they're all the same headache. They all want the same thing. Why would I be with one that doesn't give me any sex when I could be with a young girl that's constantly got energy and she gives me sex? I totally understand the transaction. I agree with doing absolutely anything you want. Just don't be delusional about it. If you're dating a woman half your age that doesn't speak the same language, don't be delusional. Men are genuinely believe, no, she loves me. She loves me because of the term hypergamy, because I'm more powerful and more successful. Women only care about those things more once they're fundamentally attracted to you. They have to be attracted to you first, then we give a shit if you're intelligent and powerful and successful. But if that underlying attraction is not there, then we're just using you. And the underlying attraction can't be there when there's a significant age gap. Because here's the thing with women, we fall in love with connection, and we have the most connection with people who are similar to us.
The reason why people don't want love is because most women want their bills paid. They don't want love.
Oh.
They got 4 or 5 people because they got more than 4 or 5 bills. And I think as long as we're in this transactional era of time, it's never going to be able to get back to love. We got to focus on the core value of what actually matters inside of a relationship. And we've strayed too far. Honestly, don't get mad at me. I know there's a lot of ladies in here.
I'm seeing all the faces behind you.
It's the truth, you know.
If I do something for you and I don't expect anything back, that's called love. If I do something for you and I expect it back, that's called a transaction. That's business. That's a contract. I don't want to have a contract with someone I love. So why would I be measuring them based on how they do the exact same thing back for me?
Now, whether you agree or disagree with the rise in transactional relationships, this video started from why can't young people afford homes? So from a financial perspective, men and women are choosing each other the least financially at a time when they need each other the most. So why can't young people afford homes? If you haven't looked at the home data like I have recently, how much is a median priced home in the United States? Well, it's over $400,000 in almost every state in the United States, as you can see here. According to Bankrate, Realtor.com, the National Association of Realtors, multiple news organizations, and pretty much anybody who has looked at housing analysis anytime recently. For most people, especially if they're not in a major city, even if you look at the combined salaries for most men and women, especially young men and women, that is not enough to afford a home in the United States. Now, we're seeing that this study from Goldman Sachs even found that adults in the United States are delaying 3 key milestones. They're no longer buying homes, or they're delaying doing so. They're no longer having children, or they're delaying doing so. For context, the median age for buying a home used to be in the 30s around the 1970s and 1980s. Now the median age for first-time home buyers is over 30. And for all home buyers, it's nearly a record high at around age 56. Multiple buyers tend to be boomers who, for example, back in those days, bought their homes in the 30s. And now they're getting their second or third homes, or they're downsizing for retirement. So you're seeing a pattern here. It used to be that in America, around by age 30, you would have children. Children is growing up, although first-time mothers at age 27, according to this study. Marriage rates are going up to about 29, according to this most recent study. And if or when people buy a home, they're doing so in their late 30s, and in most cases, on the median across the United States, in their early 50s. And when we look at the third milestone, having children and or getting married, individuals are opting to get married later or not at all. As a result, in fact, about 57% of Americans plan not to have children. Now, you might think this is all a financial reaction, but it's actually 2 different things. We're seeing a cultural change because the decision not to have children and get married is happening all around the world, even though the focus of this video is the United States. As you can see in these maps, People are having less children all around the world in almost every major developed wealthy country. So we're seeing a cultural change there. The number one reason for not having children is the choice not to have children. Most people simply say they don't want to. We can go and pull household data, and we'll see that the median household, meaning 50% of households make about $80,000 and 50% make less. And the average household makes about $120,000. We can look at net worth, and we can see that the average household has a net worth, including their primary residence, of over $1 million, while the median household has, meaning 50% make more and 50% make less, a net worth of about $193,000. Almost 90% of Americans still consider home ownership a part of the American dream. But while the American dream has gotten more expensive, unfortunately, it doesn't look like a 50-year mortgage is going to close the gap needed to buy the home of the American dream.